Hello, thanks, Scott. Hello, Andy.
Hey, Steve. Hello, Scott.
All
Hey,
right.
hi, everyone.
Hi, everybody. Welcome to the Tuesday edition. I'd like to thank Andy for filling in for me last week. I'm back, and well, let's get started. Questions panel is open, like Scott said. If you have any questions, Andy can try and type them, but if it needs visual demonstration, we'll certainly get to that as well. So it's September 25th. The disclaimer slide, just a reminder, we're not registered investment advisors here. We're content publishers and the software as a service company. So anything you see or hear should not be construed as investment advice. If you need investment advice, then you've got to seek out the guys who took all those tests and charge you a point to manage your money in many cases. So got that out of the way. You're not alone with trade ideas. We have a very vibrant community, and I just wanted to take a moment to break it down, kind of Monday through Friday, what I'm talking about. Starting on the right is Barry Anderson's screenshot. He has the live trading room, about 500 people every day in there getting a quality experience. Barry shares his desktop, and there's a handful of really good traders in there that kind of take the place of mini moderators as well. And if you're new to the industry and you're new to the business, you know, you can't beat free. That's a great price. And what Barry's putting on over there is probably giving the other rooms around here in the fintech world that charge 99 bucks a month a pretty good run for their money. So please consider the Trade Ideas live free trading room with Barry, you know, bell to bell, Monday through Friday. You can ask questions about the markets. You can ask questions about the platform, and Barry's pretty good as well. The afternoon webinars, usually 5 p.m. Eastern, Monday through Thursday. I helped Jamie yesterday, and today is Trade of the Week. Tomorrow, Dan and Brad Brad's back in town, so you got the Dan and Brad show tomorrow, talking about what's coming around the corner for future releases of trade ideas. And there's some good stuff. I might allude to it a little bit during the broadcast. And then Andy will finish tomorrow on Thursday. I filled in for him last Thursday, and he'll be back tomorrow on Thursday at 5 p.m. Eastern. So the afternoon stuff is usually pre-discussed canned content, but questions and answers certainly can take place in these webinars as well. Then Friday, we have the Friday support session. It's come one, come all, 3 hours of open content. You guys come in and tell us, hey, how do you do this? What if I want to build a scan that does that? How might I approach this? And the cool thing is typically we got 3 or 4 of us in there, Sean, Jamie, Andy, Steve. And, you know, it happened last week, you know, classic example. We were kind of butting our heads trying to figure out one scan for a certain guy. And then one of the 4 of us kind of figured out a different way to approach it. And that was the way to do it. So what I'm getting at is there's 4 of us in there at one time. It's a pretty good brain trust of people that trade and use trade ideas. So 3 hours on Friday is open for you guys to come and ask questions, either trading related or software related. The morning TI University, you see at the bottom of that slide, Monday through Thursday. It's 12 to 1:30 Eastern. Monday starts off with the basics, and they finish up with the Thursday class with more advanced stuff. And we just repeat that curriculum each week. And so if you're a new user, please consider coming by and joining the TI University series Monday through Thursday from 12 to 1:30. All right, so let's get started here. A little bit more. Here's a little more of a breakdown of the different classes with the Trade Ideas University, but broken down into 4 segments. And then the basic theme of the week's webinars are always machine. No human's better than a machine, and no machine's better than a human with a machine. And that's who we are. We're human traders that make the ultimate discretionary decisions, but we've got a machine called Trade Ideas, which really helps us narrow down the list of really good ideas, whether you're using the scans, your own personal scans, custom scans, or especially Holly giving us a list of ideas that are statistically probable. So I won't go into the oncology story of IBM and Watson, but just know, guys, that this is what the future holds. AI, machine learning, and AI is going to be our friend. Well, unless you listen to Elon Musk, he says there's a good chance they might not be as benevolent as we want. But ultimately, we're going to be the ones pulling the trigger. But the AI brings us a nice curated list of whether you're an oncologist and working with Watson treatments, or in our case, trading. bringing us a nice curated list of ideas that have some statistical probability and weight behind them. So that's why I like to remind people the humans with a machine are definitely outgunning the people without a machine. All right, or a machine by itself for that matter. Today's agenda is pretty much formulated. We'll go through some market recap. Nothing really to sneeze at today, just some more consolidation, but the general picture is up. Andy's got some ideas, some recaps on what happened in the AI module today. Another good positive day. The trade of the week, which this webinar is basically formed around, was triggered early yesterday, EVH, healthcare company. We'll talk about how we found that, why we liked it, and where it could go from here. Now, I know I wasn't here Tuesday, but I did give out some price lists on Thursday. I know Waleed and David and a few people were probably there on Thursday as well. So I'm going to recap those, and then we're going to clear out that list and keep having fun. I mean, each week we've been having some good price alerts that we're handing out. And if you have trade ideas and you accept the cloud that I'm going to give you at the end of the webinar with some real ideas going forward for this week and maybe early next week even, it's a pretty cool parting gift, because if you accept the cloud and put it into your price alerts, all of our price alerts will go off at the same time, showing us what we're about to talk about, and I'm going to definitely spend some time and mark it up. So we'll hit that as well, and then maybe if there's any time left over, a couple of chart requests, so I'll just let you guys know now. Don't put a chart in the window yet, but if there's something that you're not quite sure how it looks and you'd like to have a couple of other pair of eyes look at it, Andy and I can certainly do that at the end. So just hold those symbols until the end. But if you're thinking of something, write it down and don't forget it. So here we are at the beginning of the session. So as usual, we will go through market recap. What I said yesterday and what I said also on Thursday when I covered for Andy is that there is not much of a bear case to even think about being made right now. Yesterday we had a nice pullback and dug in, but on the spiders, the S&P 500, the benchmark of all benchmarks here, no real change from yesterday. We pulled back to the levels that we broke out from. We're holding above some key moving averages here. Well, if you want to get technical about it, we did close just a skosh below the rising 10 period, so that's not great, but it's not a deal killer. This whole area in here, the way I look at it at the moment, seems to be like the price wants to just hang out here, maybe for a day or two, maybe longer, and hopefully build a nice base camp and move higher through these prior all-time highs. So this candle right here is all-time highs. We'll go ahead and mark that. Guys, again, there's really no bear case to be made here. What would make me start to change that tune? Well, if we had a big red candle and maybe some news tomorrow, and we closed way down below this pivot level, and maybe even below this rising 50-day moving average, well, then I might have a different tune for you. But right now, just a little red candle in the general range that we put in yesterday. There's really no change. Very light volume today. We can see on the volumes there, and if you look at our relative volume to get the reading of it, SPY only had a relative volume of 0.83, so they even do normal volume by the time the bell rang at the end of the day. So no harm, no foul in price action, no harm, no foul in volume. I think we're just sitting here waiting for a reason to possibly move higher. Take a look at the NASDAQ, a little different story over there. We've been a little wishy-washy the last 2 weeks, but the most significant thing that I called out last Thursday and then yesterday is this orange line. This is the respective pivot line for the NASDAQ. We broke out above it. These were all-time NASDAQ highs back here, and then we fell back below it. Got back above it, fell back below it, got back above it. So we're playing kind of a little back and forth here. The good news is yesterday's candle bounced significantly off of that blue rising 50-day. That's a good feather in the cap for the bulls. And then we continued to hold and close above that orange pivot line that was the prior resistance. So, a little bit of consolidation. Would like to see some more upward movement and come back and try and assault these all-time highs in the NASDAQ, but we're still in kind of no man's land here. As long as these levels hold, I'll do the same thing I did in the spiders. What would make me change my tune? Well, our 50-day moving average is a lot closer than it was in the spies. So if we did the same thing and had a big red poker down candle and closed below that 50, I would immediately bring that to people's attention and say, this is little bit concerning. We want to keep a trend intact, and we had a wonderful test of the 50 back here, and twice in the last couple of weeks, and once again yesterday. So this obviously is the line that the NASDAQ traders and the bulls are watching. So if this line gets a big red candle and we close below it, that's something very different that we have not seen since back in these levels back here. Almost finished. The Dow finally got its all-time high, finally had its day 4 days ago, but we've kind of given some back. But you can see there's a gap in here, and gaps were made to be backed and filled. We are way above, or not way above, but substantially above the moving averages, 10, 20, and 50. So again, 4 or 5 days of up movement, a little pause, a little pullback, nothing to be fearful of here. This is the anatomy of what uptrends will do. They're going to have up days, and they're going to have consolidation days. And remember, sideways consolidation is always stronger than a pullback in price, but we can't always dial up what we want. So lastly, I saved the IWM, the Russell, and this one's not really doing much. It's just kind of wallowing in its own range here. Threw in a complete doji today. There's no color on the candle after 2 down days, and probably 2 or 3 unsuccessful attempts to reclaim that pivot line. So of all the 4 indexes and ETFs we just looked at, I saved the worst for last. So the Russell 2000, the small cap index, is just kind of a mess basically in the last couple of weeks here. And you can tell it's below its 20, it's below its 10. The 10 is crossed below the 20, so the moving averages are no longer fanned out with the 10 above the 20 and the 20 above the 50. So it's just kind of a mess here. It's just a rat's nest of fishing line going on in the IWM, for lack of a better case. So, just to summarize, there's still really no bear case that you'd even want to bring up. This is the anatomy of an uptrend. We just keep moving higher, so we just want to make sure that we don't sneak down and have a really bad down day that's closing below pivot lines and closing below moving averages. And that's what I'm seeing. You see anything else that I didn't hit on, Andy?
No, Steve. I mean, you hit the nail on the head pretty much on all those averages there, and described it pretty good about where we're at, and then the bullish, mostly for the most part, definitely a bullish case scenario. I think the most important, trend I would want to watch for any further downside movement. Let's face it, the Qs and the NASDAQ has kind of been our leaders overall. I know it's changed hands several times, but I think if you go back over the last, a couple of years, you're going to see more movement in the Qs. So that being said, it's been almost 5 months since they closed above that 50-period moving average. So since they closed below it, I'm sorry. And look at that. Just I can't think of anything better, a better example of an average just kind of guiding the way. If you can look back there in late June, it's been just bouncing off of it every time. Not one close below it, and it happened again Friday. So yes, I think a close below that for those who are kind of more shorter term, time frame, where you might want to get a little bit cautious, would be a close below, in those Qs below that. It doesn't necessarily mean it's a bearish looking chart, no, but you are breaking a trend that has been established for a good period of time now, and a lot of times that can lead to further selling.
And what I noticed about the two is that, the 50-day moving average is pretty much in the neighborhood right here. It's close to it. Whereas we go back over to the S&P, we got a big old chasm there. So if there was going to be a bad seed and somebody was going to break bad here in the indexes, it would be the NASDAQ to do it first, because its support is a little bit closer to current price action than we have in the trend line support on the S&P. I mean, one could make the same case for the most part. The S&P has been doing the same thing with its 20-day moving average that the Qs have been doing with its 50, but the Qs are definitely the most likely to disappoint technically. It could do it in one fell swoop in one simple red candle day. So not trying to predict it, just trying to call it out that that's what we're watching for. Otherwise, we're not going to change our tune. This is a juggernaut bull market, and it doesn't seem to want to stop anytime soon.
No, all right. And we do have end of quarter. This is end of quarter coming up, so a lot of times, markets will be propped up, by the big funds waiting for those quarterly statements to go out.
And people say this every year. Oh boy, October. That's the month that the crashes always seem to occur, and that's coming up. But there's not a lot of negative sentiment going into October, so it's just a back thought. It's just an afterthought in the background. All right. Did you want to take the screen for the Holly stuff?
Yeah. Let me do that real quick. All right. Can you see it?
Yes, I can. Sorry.
Okay, no problem. Yeah, what I've done is just kind of expanded my Holly windows to make it a little more easier for you guys to follow along. And impressive day. You can see the numbers over here, the final tally. Now these are the best numbers, and they were all risk on. I will say this, NEO by far was the strongest. Obviously, you can see there. But I tell you what I really like about NEO is look at the risk off. And last week, guys, I showed you the same thing, guys. And this is the kind of stuff that I love seeing, is when risk off is performing so well, because that tells me that the AI is getting better at its exits, at its risk parameters, its profit saves and things like that. And this is really impressive. As a matter of fact, I'm going to have to look around or dig deep to see when I've saw a risk off so high. This is very impressive. And we'll go over these trades in a minute, because there's a lot of things I want to point out today. Real briefly, Holly 2.0 did fairly well. And just remember, let's look at the backdrop. We always got to look at the backdrop, what we had to work with. Gap up, filled the gap, went lower, popped up. So this is a tough day for anything trading. I'd say anything, human or machine or algo or whatever. This is a tough day, and Holly really performed well. Without pulling it up, Holly Grail. Well, I'll pull it up. I don't want you to think I'm keeping anything from you. It didn't do as well. You can see a lot of stop hits. Risk on finished okay, but risk off finished down. So this was the least performing, performer of the day, but compares nothing to how good Holly NEO was. So just on risk off, you're talking about down 0.94, 94 cents. And then you look at risk on or risk off on Holly NEO, both over $5. So very impressive. And what I liked, let's go back to Holly NEO. And this is the kind of stuff I think you guys, when we do, I say when, not if, because we will get into a bear market at some point. This is the kind of stuff that's very powerful. I mean, I want you to look at, let's see if I can get these two. Well, I got one up here, but look at these two short strategies today. Selling strength and power hour short. Both of them had 3 trades, so 6 trades in all, and 100% winners. So every one of these alerts were winners. And not only that, look at the risk. I mean, the risk on profit and the risk off profit. Very impressive.
Looks like they tested around 66% last night, so they outperformed. Plus the top one too. Yeah.
Yeah. A nice winning percentage last night. Look at the profit factor from last night. Well, that showed today in the profit that these 6 trades returned. That's very strong. And trust me, when we do, for those of you who haven't been trading for the last 9 or 10 years, which I imagine is probably the majority of you, this can be very valuable. When we do get in a bear market and you're like, oh gosh, the stuff that I've done forever, buying dips or buying breakouts, that stuff's no longer working. What can I do? Well, turn to Holly, because Holly can definitely help you. Even if you're not taking the trades, you can understand what she is doing. Selling strength. Okay. Now, this is a dangerous proposition at times, and when you're in a raging bull market, but when it works, it works. And let's take a look at this top one right here, this top producer, Paychecks. And boy, was that beautiful. So when you do, jump into a trade like this, okay, you're going against the grain. It's pretty much at all-time highs, and you're fading it. So, but the reward can be tremendous when you're right in these types of trades. The only thing about these types of trades is you got to get out when you're wrong, okay? You don't sit here and fight the tape when you're wrong, okay? But that's a great example of when the dynamics of the market start changing a little bit and these things start working. You got to let them work for you. Here's another one right here. Yum, another shell, fading string. There it is. And look, once again, guys, I'm going to go back to my theme that I was talking about forever. I want you to look at, okay, we're going to look at the pain in each of these trades. Was there any pain? Paychecks, no pain. You basically shorted maybe 5, 6, 7 cents or something like that compared to the reward you got. RYTM, another big winner. Power hour short. Look at that. This was in the last hour after it already sold off a little bit, but this is a momentum to the downside trade and very little pain. It was taken right there and beautiful trade right there. We did have some longs in there today that performed well as well. 5-day bounce. Look at that. Entry, no pain.
Look at that 10-period moving average. Hold it up.
Yep.
Well, I'll be giving more examples.
Yep. 10-period moving average, just riding higher. SSPI. This one right here is your entry. So really no pain, and exit. Now, if you tried to hold on to this one, you finally, would have gotten some pain. But boy, for as far as an initial momentum trade, no pain. So I've shown this over and over, guys, and I want, because there could be something develop here where you can kind of get a jump, and maybe you make your reduced risk a lot less than what Holly does, because I noticed in a lot of our losers, they're immediately, this is a long, and immediately just went against it. You're trying to bullish pullback. You're trying to buy a pullback here, and it just keeps going. KNX, there's another long, never really worked. Not like what you were seeing over here on the no pain trades where you got basically continuation immediately afterwards. This one, you start going back and forth. Maybe you said, well, from what I've learned in the webinars, we might want to cut this quicker if it's not, if it's exerting this much pain on me. So anyway, I love bringing this up and analyzing this kind of stuff. Here's another long on a bullish pullback. See, the bullish pullbacks weren't performing all that great today. But the 5-day bounce, look at that. 5 trades, 80% winner. So these are more of 5-day bounces off the daily time frame. So these are oversold stocks. So they actually worked, but the bullish pullbacks didn't do all that well today.
It's interesting to note there, Andy, the long strategy that did work. As we look down the market recap, we've had 3 or 4 good days of selling, so would kind of make sense that some of these things might start to bounce after a few days of broader market selling.
Yep, it's a good point. We can look at some of these. You can see a few of them right here. We just went over them, and you can see the daily here, kind of oversold, been pulling back for several days, and now we had our 5-day bounce. Nice trade there. Burl. There is your several days of selling off, and now you had a little bounce.
Oh, it's funny. That's one of the ones I picked for later. We'll get to that one.
Oh, good. Good.
Threw it in there was like a sorbet. Everything else was uptrending, so I had to have some sort of a palate cleaner.
So, yeah. So, guys, I want to, as we get closer to launching, and I'm not going to tease you with any ETAs or anything, but as we get closer to launching our AI for auto trading, you might want to keep an eye on some of these strategies and how they work in different markets. Okay, so if the market is getting a little bit long on the tooth on the longer term time frame, and you see some gaps being closed real quick, maybe you want to start paying into the selling strength. Okay, because if I can almost guarantee you, if we get into kind of a bearish tape, this is going to be a productive strategy, because you're contrarian. Okay, the market has changed, and now instead of being the trader that chases that strength like you did back in the bull market, now you're going to be the smart one and start selling that strength and shorting it and fading it. So these can be very profitable strategies, and once we get into a bear market. But other than that, Steve, I mean, a very impressive day for NEO, and You know, Holly 2.0, let's jump over and look at it real quick. So we went over Holly Grail. We saw that it wasn't all that great, but once again, you know, focusing on, even though risk off doesn't compare all that great to the risk on, remember that the market that we have, it was a tough market. And when you see this risk on off column, you know, with the 80, 50, 45, and you see them smaller down here, that's the kind of thing you want to see, you know, when you're examining these alerts at the end of the day. You want to make sure, you know, but there was obviously plenty of more, you know, meat on the bone with several of these trades with a risk on profit of 2.20. So I might give an example here of this BHVN where Holly got out for a risk off at 35 cents, took it pretty quick, and actually that was a timed exit. Okay, so if you would have held on to this, you know, there would have been plenty of meat left on that bone, as much as over twice as much, up to 0.86 cents. Waleed, yes, the Holly score-based strategy was launched. We had one trade yesterday. I'm not sure how that did. I remember I was watching it, then I got tied up in something, but it's in there. It is in there.
I think there was an adjustment Dave had to make. A couple of trades snuck in there that had lower scores, and so it was immediately shut down until Dave could appoint the right server to that. But it should be working now. You can keep an eye out for it. It's called Straight Out of Compland.
Yeah. But anyway, that's you know, some good stuff there. Yeah, Waleed, I think we did have one. I think Steve's right. He had to fix that over the weekend, and then we did have one. Or maybe that was Thursday, and then we had one on Friday. I think that's what it was.
I think that was the case.
Mm-hmm. But I think that just about wraps it up overall. Right. You know, considering the market, a very good day for Holly.
Yeah, I'm going to add a little something to it. I'll take it back here, Andy. Okay. Thank you. So two good things are coming. One has to happen first, then the other will eventually come. The number one question everybody wants to know: can I auto trade Holly? And we've, you know, kind of put that out, but it's getting closer. And I don't know, I can't really say if it's weeks or a couple months, but it's getting closer, guys. So certain things are happening behind the scenes that need to happen. Yes, David, the Straight Out of Compland one. That's the one with the only one with the comp rating at the moment. So the good news that I have is that is coming. And it might be sooner than maybe some people thought, but the really good news that is coming, and Andy can back me up on this because we both saw it with our own eyes today in the marketing meeting. Dave, the local genius you don't hear much about, is working to create a ability to have all three segments. Instead of having to switch segments like this inside this window, we will now be able to have all three windows, which has been something Barry in the room has been really clamoring for, and we have as well, because just monitoring these three thumbnails doesn't really give us the full picture. So coming very soon, again, I'm not going to send a date out, but very soon, yes, Waleed, we've all been asking for it and they know it. We should have the ability, and it was done, so it's on the development servers right now, so we saw it with our own eyes. It can be done, and it should be coming to a theater near you soon. So wanted to make that announcement for sure. No dates, no time frames, but we saw it with our own eyes. It's coming. The multiple Holly windows will be available very soon, and that'll make it a lot easier to follow the AI in real time throughout the day.
Of course, you might have to have a layout totally dedicated to Holly, because it's going to be a lot of data to put, you know, try to fit in with your other windows.
Might have to buy another screen, or at least a bigger screen.
Yeah, exactly. Yeah.
Okay, to a computer screen near you, correct, Mike? All right, so moving on, guys, this is the sixth, I think, week in a row we have derived the trade of the week from the comp my composite rating. This is not the Holly scan. This is a little different than the one Andy uses. You guys know that I like to really concern myself with the short float. What good-looking stocks out there are the short sellers missing the boat on, and why are they stubbornly staying in them? And when they have to finally capitulate and get out, that's a price driver higher, known as a short squeeze. And so I said, well, if we're going to take all these great-looking stocks that we know are solid and sound fundamentally, and solid and sound technically, Well, we've just really, with this one little filter, guys, we have done a lot of work for you. Going forward, all you have to do is just right click and go to configure and search for the score filter. And then if you put a score filter in there, I'll demonstrate it for you. Score, there it is, the stock composite rating. And it would look like this in the filter set. I'll hide the unused. Score composite, stock composite rating 90 minimum. So it's saying only show me the A students. The stocks with a composite rating of 90 to 100 are the most strongest fundamentally and technically sound. So my thinking was, great, let's take those and then let's find out which stocks have giant short floats. So my column is sorted by short, and my colors are also dedicated to the shorts. And so once again, this is where we found the trade of the week. I believe it's on here still. Where are you?
Yeah, I was looking for it. I couldn't find it.
Let me try something here. Well, that's crazy.
There it is. I see it now.
Okay.
About 2/3 of the way down.
Here we go. So this has been a great scan, and ironically, when I get to the second the segment after this, I gave out 7 or 8 trades last week in the Thursday webinar. EVH was one of them. So it's kind of funny that one of the trades that I gave out in the price alerts actually turned out to become the trade of the week, because from Thursday to Friday, we only had one more day of data, and it gave us a good one. So let's take a look at what we had to work with. And guys, this is the chart that I just salivate over, and I try to get people to imprint on their mind. There's just so much goodness here. All right, first off, these are all-time highs back at that level. And let's just focus on the technicals for a moment. A nice gap up on giant volume. There's either news or earnings. I don't care. I'll let the price action tell me. And then a nice pullback, 2 days, and then sideways action. And what have I just been saying on and on, whether you're on a daily chart or a 15-minute chart? The simple 10-period moving average is the hand that just guides the price. And when I see a stock in an uptrend like this at all-time highs, and it's pulling back and it's going sideways, this is the one I'm looking for. The rising moving average catches up to the sideways price action, and if it's gonna go, this is when it's gonna go. If it's gonna bleed through, then I start to lose interest. But it didn't bleed through. It did exactly what we wanted. So we really only had about that much data, that green bar going into Friday. That's what we were looking at. So we had a stock on our composite rating list, healthy, technically healthy, 13.9 short float. Not that great. I'd like to see things in the 20s and 30s, 40s, but this is it. I mean, it doesn't get any better than this. An uptrend, the fanned out moving average, the 10 above the 20 above the 50, price action going sideways, the rising 10 period becomes the guiding hand that lifts it higher. Now we had Monday, we had a nice trigger and a fake out. And I thought, okay, well, maybe we're going to be discussing one of those scenarios where we get the trigger and then it doesn't do what we thought, and we have to go into trade management mode. Keep an eye on the general market, keep an eye on where the closing prices are, but it didn't give us any of those fits. It just opened up again today and moved higher. At the end of the day, we did relative volume 0.96, so pretty much normal volume. But guys, if you're one of the 15% short the stock and it was trading at all-time highs today, you got to ask yourself, what am I doing here? And hopefully a few people did. Let's go back to the intraday. Oh, look at how the 10-period moving average helps us on the intraday on a 15-minute chart. Nice explosion on the morning. Look at this, it's fractal in nature. Sideways, sideways, sideways. Here comes the 10-period. Didn't even touch the price before the price got nervous and moved higher. Came back, a little first red candle of 2 of the day, came back. Where did it settle in? On the rising 10-period 15-minute chart. And then this is to be expected. As you get into the last 90 minutes of the day, you're going to start to get some profit taking, some slop, some messiness. But for a good chunk of the day, I mean, you had a simple guideline of that 10-period moving average holding that price up. So the stop was, and again, for the people who are wondering, why are you not giving us a to the penny stop? Because we're trying to stay one step ahead of the shady industry out there that sells your good till canceled stop orders. You guys might be happy with Thinkorswim or Ameritrade or E-Trade, but know that they're cashing checks on you by selling out you and everybody else's open orders, so that the machines out there and the Virtue and Citadel, those are the ones that buy the order flow from the brokers, and then they have a complete market view of where all the stop orders are, all the buy orders. And so if everybody comes in and starts putting stops at the exact same penny because an email said to do so, Well, what we saw that started to happen was the stocks were opening up and the algorithms were running down and running those stops and bowling them over like a bowling ball, hitting a strike, and then price pops right back up. You're out of your shares, and the machine, shook you from it. We don't want that anymore, so we're trying to stay proactive and one step ahead of that nonsense. And so now the stops are up to your discretion. I'm just giving you an idea of where to place them. So we no longer line up those pins for the those algorithms out there that want to run stops. And so I put a stop under this rising 10-20 period here. So ideally, we don't even need to worry about this rising 10 period, and the 20 will just continue to stay below it. But if the price does roll over, I'm not going to like it, because we at least had a first movement higher, and now we're in all-time highs. I really don't want to see that, but nonetheless, that's where the stop was when the article was written, because we didn't know that we were going to get a nice push higher. We hoped, but we didn't know. But if we got a little close below, it's possible this gap could have been pulled back and filled, and then it took off to all-time highs. I've seen that many times, but if your stop is below this 20 period, that would not have affected you. So all systems are green and go here. When we get into situations with no upside resistance, because there is no upside resistance, this is blue sky country here, all-time highs, it really just becomes kind of a money management thing. And these are the kind of perfect plays that I think if you could dissect into maybe 3 chunks, maybe you sold a chunk today after that first move and you're still long 2/3, and you can still profit and make money as that stock moves higher. But I can tell you, don't get too greedy. If we get lucky enough to have this thing maybe move 10%, you should be taking some significant profits about that point. So I'm going to try not to be so specific on the stops and even the upside targets. I want to focus more on getting you guys into the entry and what the decisions and the data points were surrounding the entry and the circumstances. But I will take these trades all day long: gap up, sideways, moving average, pushing the price higher. All right. Yes, Waleed is now a believer. He has heard me talk about this 24 times over the last few months, and he's seen enough examples to say there are no coincidences with that particular moving average indicator. All right, so that was last week's trade of the week. Again, Saturday morning, probably going to be perusing this again for a first glance to see what we have. I just love the way it's working. Now, is this going to work really well in a bear market? Probably not. This is working well because these are solid stocks in uptrends in an uptrending market at all-time highs, and we're basically just squeezing the shorts, popping them like little hedgehogs, one after the other. Hedgehog probably wasn't the right word. I'm thinking of prairie dog, popping them like prairie dog. All right, bopping them on the head. That is it for that. Now, what I want to do is take you all back to Thursday night. I did the same thing for the Thursday webinar on the price alerts. Let's see how we did. Let's pop that down here. All right, so WWE, which was, of course, way back here. This was the breakout that I think started the trade of the week from 3 or 4 weeks ago, and all-time highs again today.
And that
so
was
that
from, I think, correct me if I'm wrong, but I think that was from the composite rating, right? Wasn't WWE had been the first one?
Yeah. They all are. The last 6 weeks.
I think that was the first one, but
the first one that we pulled out of. Yeah, it might have been.
I think it was. Yeah.
So I gave this out last week, and what was I seeing last week on Thursday? Let's see if I can. Okay, perfect. I'm seeing sideways, 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 and just waiting for a reason to maybe pop higher, knowing that we got 24% short the float. Still 1/4 of the people in this thing on the wrong side of the boat. That produced some alpha and some profits for people, I hope. Given out Thursday night also was HIIQ. I think we're going to come back to this one in a minute. But the green line signifies the movement. Good couple of days push above that green line. Here is the EVH, which was also the trade of the week. So not only was it the trade of the week, it was also given out last Thursday in the Thursday webinar. This MB just triggered today. It took its sweet time, but triggered today and closed on highs. There might be some more meat on that bone. Gov, this was my sorbet from last week, saying, it's a palate cleanser. Let's try something that's maybe a dead cat bounce. And in my notes, if you'll recall, the notes say maybe a maybe a nice 1.5 day hold, oversold, bounce, and then bail. Well, it looks like it only gave people about a day. That blue arrow, it was a nice little candle that moved up. So it went from like 1150 up till 1193 that day. gave some back. Typically, like I said in the notes there, you can't trust these dead cat bounces for too much. Maybe a day or a day and a half. Take your loot and run. And then it looks like Chegg also triggered today. And look at this, really nice, tons of bottoming wicks, kicking the price back up into play. Good 2 weeks of sideways action, and then a trigger. I put the trigger on Thursday's webinar just above that high of the range, and it triggered today. Obviously, I think if people are in this one, they're going to want to see it take out those highs again. And I'm not sure if they're all-time highs or not. I think they are. But that one should be working as well. So that was Thursday's list. Let's clean that out, and let's play again. Delete 8 selected alerts. All right, so I composed a list of another 8 stocks. 6 of them are from the composite rating short squeezer that I just had up, and 2 of them I found that I liked from Holly. I'm always looking at the Holly trades to see if the volume that came in that got the AI to trigger something midday actually is going to translate into something bigger. So we'll see. All right, let's do this week's. So the 6 I'm going to start with came off the composite rating. I'm going back to the well here on HIIQ. Huge short, 48% of 7 million. Now that's the recipe for disaster. 7 million is not a big float. 70 is, but 7 is not. And as you could probably guess, a short squeeze in a small float stock is going to be compounded. So if this thing does get going, I think it's going to really get going even more. So we had a nice pop off of that little triangle wedge down there, and it looks like we're doing a sideways kind of an action here. We could go sideways for a couple more days, but all I'm going to do is find the high, which I believe is 59.75, and we'll go 76 and make this our first one. Notes are always important. 48% short, and are you kidding me? 7 million float. That's a big deal. Very small float will accentuate and amplify any crazy moves, and the short sellers, all somebody has to do is yell fire in the crowded theater, and that might get it going. I like the consolidation not pulling back, it's just sideways, and I think that's part and parcel of the giant shorts in there. They're trapped. These things are trapped. They've had 2 big days, and every time they try and rally, the sellers come back in, but they can't break it to pull it back. So we'll see how that one pans out. HIIQ. This one, Wing, was also found. I should probably just bring this up so we can stare at it. No. The composite rating, since I found these off of there. All right, so Wing, pretty similar to the Chegg earlier. Nice breakout of a range. Honestly, I would have liked to have seen it back here at these levels. But what do we have? We've got 23% short, 28 million shares in the float. There's still a possible good move on this. I'm just going to make it at all-time highs, though. I don't want to. I don't know. What do you think, Andy? I'll consult you on this.
Yeah, I think since you did, it wasn't marked for today, you almost have to, yeah, because otherwise it's in no man's land. Yeah,
it's in no man's land. So high of 74 cents. Let's go 75. 70.75 long. This one has what is it? 23% short the float. And recent highs will trigger. All right, 2 of them are set now. Let's go to MDB. Okay, another nice trending stock. MDB, it's got a 94 composite rating, and 22% are short this thing. So they're missing something that everybody else is seeing. And again, on this one, very similar to the last chart we just had. Well, actually, this one might try and break out of that range. Let's do this one a little different, Andy. Let's get a head start on this one. I'm gonna use this red candle here because it was the high end of the last 5 or 6 day range. And then the theory is if we break through there, the momentum hopefully will carry us through these highs back here. And again, I don't know if this is all-time highs. Looks like it is. All right, so the high of that candle is 80.78. Nope, that was the low. It was 35 cents. So we'll go 36 cents. And what are the metrics telling us again? MDB, got 22% short the float. And how many are in the float? Not too big, 26 million. Float, nice range break, all-time highs. Next one is Roku. Next one is Roku. Roku's been threatening, but looks really good.
Mm-hmm.
And this one is 21%. And what's the float? 67. A bigger float, but we're going to just look at this all-time high candle right there at 25 and mark it up at 26. Notice the nice sideways action. Notice, guys, how 3 out of the last 5 days, well, 4 out of the last 5 days, it has tested the 10-period moving average and has succeeded in bouncing back up and closing above. So we'll say 21% short the float. Nice consolidation and testing of the 10-day SMA. All-time highs. Head start. All right, I like this one a lot. I like the nice tight candles. They're just riding that line, moving higher and not wanting to go below it. Yeah, Chegg had some nice wicks too. All right, so next is going to be Sky. Kind of moving from top to bottom on this one. This one's not, you know what?
That's a tough one.
I don't like this one. I'm going to kill this one.
Okay.
I don't know what I was thinking on that one. And I like that you chimed in and saw the same thing. All right, so let's go to Chegg. Again, throwing those downside wicks, popping the price back up. Those are very bullish daily candles, bottoming tails. We broke up out of the range. Same thing here. We're going to have to wait until we get to all-time highs there, I think. Which, I'm going to delete that line. Take a look at that high, 82. So we'll go to 83. And as you can see, as we're going lower and lower down here on here, we're losing a bit of our short float. So now we're only down to 11%, which isn't really much of a consideration. Mostly like chart pattern, because it has been slowly working off of its short sellers, but mostly like the chart pattern to all-time highs. The short float. Okay, so that's it for the composite ratings, because as I get down here deeper in the barrel, these guys down here don't have as much oomph behind it because the short float. The ones up here have all the power stored in them because of the short float building up. And again, the one I liked the most was, which one was it? With the low, let's look here.
Was it?
It was HIIQ.
Okay.
It was HIIQ. I like it because it has a very tiny float, only 7 million shares. Yeah. All right, so the next two, the last two were derived from Holly, BURL. That's the one that you talked about. And I said, you know, maybe try and throw in another, exactly, a nice bottoming wick yesterday, and big, not big, a long minor downtrend, you know, 2-3 weeks of selling. Looking at the bigger picture, kind of a nice little trend line coming off here. But I'm going to say the same thing I said before, maybe a 1.5 day hold, and that's about it, because I don't trust these things. They're just going to kind of put a bounce in, but one good day is really all you need on these to bag a little bit of profit. So 160.55, we'll go to 56. Maybe a good 1 day or 1.5 day hold, hit it and bail. All right, and lastly, also derived from Holly, WPM, wampum. Paid in wampum. Now, people probably wonder, what's going on? Why is Steve liking this one? Well, I'm liking the way it put in the low here, and it's sideways consolidating. These moving averages, it's above the rising 10. The 20 is about ready to flatten out and turn. Again, this could be a simple little trend change, maybe good for a day or two. But all I'm going to do is just put a high end of that 3rd day high 3 days ago, and we'll use that as our trigger. 1720, 1721, maybe good for a day bounce or a 1.5 day hold. Hit it and quit. I'm gonna hit it and quit. All right, so that was the rationale, the reasoning behind what was once 8, now 7. So let's go ahead and grab this, and we can make it shareable. And while I'm doing it, if somebody's got a chart they want to look at, we'll do maybe 1 or 2, possibly 3 at the most, but we're getting close. I will take a moment here to create the cloud link of the price alerts. And again, the nice thing is, If you accept this price alert, it's going to dump all these working alerts into your system. And if you have it minimized in an active window, if any of these trigger tomorrow or the next week or this week, we're all going to see these alerts at the exact same time and price. And hopefully my notes make a little sense to you. So I highlight all of them, right click, looking for share, 7 price alerts, copy all, and I'm going to dump that in the chat window of the GoToWebinar. So price alerts for September 25th. Control paste. All right, so if anybody wants to receive that, it's all yours. All right, anybody have a chart requests they want to take a look at? Otherwise, we're just gonna wrap it up and bring Scott back, but we've got a minute or two. It's always nice to have somebody else look at it, and if you have one, it's nice to know if you're long or short or thinking about long or short and you're not currently in it. That always helps. They're quiet out there
Must
today.
be a bunch of day traders in here.
They got their parting gift and they're bailing now. All right, so it doesn't seem like anybody has anything unless something comes in the next few seconds here. I'll probably turn it over to Scott. So, all right, well, nice comments. Thank you, Waleed and everybody. Looks like we're going to go ahead and bring in Scott. All right, so let me bring up my slide deck and get on the right one. And go ahead, Scott. We're ready.
All right, thanks. So on the way out, a couple items. There's a podcast that we put out every Friday, so make sure you're subscribed to that so you get the new one. Just search for Trade Ideas Podcast wherever you listen to your podcast and hit the subscribe button. Also check out the back catalog of previous episodes. Good stuff. Make sure you've got the new ebook, trade-ideas.com/ebook, 5 ways to win in a post-BTFD market. Both Steve and Andy contributed chapters. There's 5 strategies there for when buying the effing dip isn't really feasible. Just make sure you've got that in your trader's toolbox. Really easy to get, trade-ideas.com/ebook. Put in your email address, get the download link. Our summit is sold out for in-person tickets, but you can watch the presenters and the panels live and then get early access to the recordings by going to trade-ideas.com/livestream, and that'll sign you up for the updates, and you'll get the URL to watch the live stream on the day, and then you'll get the first updates of how to watch the recordings in case you are not able to tune in for the whole thing. It's the event in San Diego is sold out. However, we are starting a wait list, so if you are able to make San Diego for the 20th, would like to get a ticket, just email info@trade-ideas.com and let them know that you're interested, and we'll put you on the wait list and let you know if something becomes available. Right, we have a code that's good for the rest of this month, which means it's good until next week. September days, all caps, just like you see it on your screen, will save you 15% off your first month or year of Trade Ideas. You can also use this to do an upgrade if you are a standard Trade Ideas subscriber and wish to save on moving into premium. We also prorate now, so it's a good time to do that. Just use that code. Thanks everyone for attending. We'll have the recording up later on tonight or tomorrow. Any questions, shoot the email to info@trade-ideas.com. That goes into our help desk software, so it gets routed to the appropriate team member. But you can follow Steve Gomez on Twitter at TodayTrader. Also at Trade Ideas is the main handle, and Jamie Hodges at QuantBot. Facebook.com/TradeIdeasPro is the place to like us on Facebook so that you can share what we post with your friends. Thanks, Steve and Andy. Thanks, everyone, for attending.
All right, thanks. See you next time.
Later on.
Thanks, everybody. I'll see you Thursday.
Bye.